everyone, my name is Ilya Shahira. My metric number is 264398 and I will present the first and second part of this topic, which consists of audit objective and the nature of revenue and receivable.
Hi, my name is Nursyuhada binti Abdul Razak. My metric number is 264371. So for this topic, I will explain about the third part, which is the accounting system and control activities, which includes the customer's order, the credit approval, and also the issuing of goods.
Hi and Assalamualaikum. My name is Nurul Najwa binti Zailan Jeffrey. My metric number is 264404. I will explain the third part of this topic. My explanation will consist of 4 things, which is invoicing customer, recording the sales, collection of sales and receivable, adjustment to sales and receivable.
Assalamualaikum and hi everyone. My name is Nurul Natasa binti Hashim. My metric number is 264963. Today I will present on part 4, which is develop the audit plan, and last part for the conclusion. Stay tuned.
Hi, my name is Nokoratu Aibid Shafia Zain. My metric number is 264856 and I will be presenting the fifth part on this topic, which is the test of control and also introduction for substantive procedure.
Hi, my name is Nur Shazad binti Sarif. My metric number 263742. I will present the fifth part of the assignment, which is the performing further audit procedures.
So before we go detail to this topic, first of all, we need to understand and see the surface of the topic. So auditing of revenue cycle, topic 2. There are 5 subtopics that will be discussed, and the first one is audit objective that have 3 levels, which are transaction objective, balances objective, presentation and disclosure objective. So all of this level has different audit objective. The second part is nature of revenue and receivable. So we will understand 5 classes of transaction. And the third part is the accounting system and control activities that has 7 processes, which start from customer order, credit approval, issuing goods, invoicing customer, recording the sales, collection of cash, sales and receivable, and finally we adjustment to sales and receivable. So the fourth part is developing the audit plan. So we will understanding the entity to identify the inherent risk. The auditor also will obtain understanding of internal control over sales and receivable. And we will assessing risk of material misstatement. And finally, we will designing further audit procedure. And the last part of this topic, we will discuss on performing further audit procedure. So there are 2 types of audit procedure. The first one is test of control and the second one is substantive procedure. So test of control, or we can call TOC, have 2 types, which are test of design effectiveness and test of operating effectiveness. So they are different here. Design effectiveness and operating effectiveness. And the substantive procedure have 3 parts or 3 types, which are analytical procedure, test of details of transaction, and test of details of balance. Okay, just to inform everyone that this topic you can search by yourself on audit textbook, chapter 9 on page 136. Okay, so before we go detail to this topic, first of all, we need to understand the concept of revenue cycle. So what is revenue cycle? Okay, revenue cycle is a selling transaction between the seller and the customer. The process starts when the customer submit orders, followed by the seller deliver and bill to the customer based on their orders. Okay, the final transaction will ended by recording and collecting account receivable of their sales. So there are two processes of auditing revenue cycle. The first one is the auditor tests on revenue account on the client's income statement, and the auditor make an examination on the account receivable in the balance sheet of the clients. This chapter will be discussing the auditor task in three main areas, which are classes of sales transaction, cash receipt and sales adjustment, and balance in account receivable. Next, we move to 2.1 section, which will discuss on audit objective. So there are two types of audit objective that we'll discuss on this topic, which is the general audit objective and the specific audit objective for a revenue cycle. Okay. The audit objective plays role as a benchmark for an auditor in performing their work so that they can detect any material misstatement or fraud that could happen in the revenue and receivable. Having sufficient audit evidence for the transaction and balances is very important in audit work. So, there are three main purposes of auditing in a revenue cycle. The first one is the sales are neither understated nor overstated, and the sales are genuine. The auditor are responsible to ensure the figure of sales are recorded perfectly and tally with the transaction without any misstatement. So, the auditor must verify the existence of sales transaction and make sure that the transactions are not being created by the management. For example, there is a risk that not all of the sales are recorded in the statement because when management want to decrease their tax, so they may hide their certain sales to avoid them in paying higher tax. So, the auditor duty is to detect all sales are recorded completely. The second audit objective for revenue cycle is the receivable are existing and the amount are collectible. This is because not all sales are in cash. Therefore, the clients may sell their product or service in credit to help the customer buy first and pay later in a range of time that the seller schedule, or in a simple word we can say that the seller create receivable. So the auditor mission is to guarantee all receivables amount that management recorded can be collected and they are in existence as reported by the clients. The third audit objective for revenue cycle is provisions for doubtful debt are sufficiently provided for receivables that have become a bad debt or are doubtful in terms of their collectivity. For example, when the seller gives sales credit to their receivables, there might some receivables that could not pay their debt to seller. So, the management should make provision for the debt in doubtful and record it. So, the role of auditor here is to assure the provision that have been recorded are adequate, since they will use all the information in their audit work, and because of insufficient information in provision will affect their audit work. So as I mentioned before, there are two types of audit objective. So this is the second one, general audit objective. General audit objective has three levels, which are transaction objective involve of occurrence, completeness, accuracy, cut-off, and classification. The second level, balance objective, involve of existence, rights and obligation, completeness, valuation, and allegation. And the last part of general audit objective is presentation and disclosure objective. So it involves of occurrence, rights and obligation, completeness, classification and understandability, accuracy, and evaluation. So all of these objectives will be discussed further on the next section. So generally, the audit objectives are different based on three levels for sales and receivable. The objective of the audit are vary according to the type of client businesses. For example, merchandising companies selling credit have different audit objectives than those of non-merchandising company. Next, we move to 2.2, which is nature of revenue and receivable. Before that, I want to explain that when we are dealing with sales or revenue, the auditor always have to assume that there are a risk of fraud. Okay, why? Because the revenue is one of the largest account in profit or loss. So that's why the auditor have to be very careful when auditing sales and account receivable. So there are 5 classes of transaction in revenue cycle. It starts when the business make sales, whether in cash or credit, and then when the customer pay for their purchasing in goods or service, the business will receive cash. Sometimes, when the product or service are not satisfying the customer wants, they could make returns, and the company will give some allowances to the unhappy customers, and the management might write off accounts for customers that do not pay for their purchasing, and at the end of the period, the management have to account for bad debt expense. The revenue cycle includes a few processes that involve some documentation to support the process that will be used by the auditor in assessing risks of fraud. So there are 4 processes. First process is receive order from customers. The documentation involved is customer order and sales order. Delivering and billing involve of shipping documents and invoice. For the recording process, journals, account, and statement are involved. And the last process, sales and account receivable collection, only receipt that involved.
Okay, for the next part, we will talk about the accounting system and control activities. Okay, before we talk about the control activities, we need to understand about the revenue cycle first. So there are 3 main components of revenue cycle, which are the sales, cash receipts, and sales adjustment. Okay, this component will be explained further later. So we start off with the sales process. Okay, what happened in the sales process? We start with the customer's order. So the customer, when they want to purchase goods from our company, they need to fill in a form, which is the sales order form. So the sales order form will then be sent when the customers fill in the form. The sales order will be sent to the sales department. So the sales department will check the customer's order and credit rating before the amount of sales and credits is approved. So when the when the sales and the credits is approved, the sales department will send the sales order to the warehouse department. So in the warehouse department, they will process the sales order and they will deliver the goods to the customer. They will also attach a delivery notes with the description and quantity of the goods. Okay, they will attach the delivery notes with the goods to deliver to the customer. Okay, so what happened next is the sales department will send an invoice to the customer. Okay, so the invoice issued is actually based on the information stated in the delivery notes and the price list. Okay, so the customer will receive the original copy of the invoice. Meanwhile, the accounting department will receive the copy of the invoice. Okay, and then there are also a collecting department which they are responsible to collect payment from the customer. Okay, so in the sales process, there are several department involved, right? Like the sales department, warehouse department, collecting department, and also the accounting department. So all of these department, they are responsible to key in the data and record the transaction. But for the accounting department, they are the one who make sure that all of the transaction is recorded properly. So all of the transaction that is recorded by the departments, the accounting departments will make sure that all of the transaction is recorded properly. Next, we move on to the first process, which is the customer's order. Okay, for the customer have a variety of ways to place an order. They can order over the counter, they can make a call, or they can order online. Okay, so because there's a variety of ways for the customer to order, so the sales order can be processed either electronically or in written form. Okay, so which department that is responsible for managing the customer's order? So the sales department is the one that is responsible in managing the sales order. Okay, we talked about the sales order form before this, right? So this is an example of the sales order form. Okay, the sales order form, as you can see here, there is the description of the customers, there is the detail about the products, about the goods ordered, the quantity, the description and the price, and the credit terms provided. And other than that, to prevent missing sales order form, the sales order form can be pre-numbered as well. Next, we talk about the audit objective. Okay, for the audit objective is the occurrence. Okay, why? Because the sales order is actually the first trail of documentary evidence. So, the sales order, the authenticity of the sales order need to be checked to make sure that there are no fictitious transactions are created. Okay, next we move on to the second process, which is the credit approval process. So, what is the credit approval process? So, the credit approval process is actually a process in evaluating the credit rating of the customer, where the ability of the customers will be evaluated and estimated whether they can fulfill their financial commitments or not. So, this credit approval process is actually a crucial process for the company where the company needs to avoid the customer which have a poor credit risk. So what is poor credit risk means? So the poor credit risk means that the customer may have high possibility that they are going to fail in paying the credit to the company. Okay, so the credit approval process is entrusted to an independent department under the sales department. Okay, now we look at the credit approval process. Okay, the credit approval process needs to be done for both new customer and existing customer. Okay, for the new customer, the credit manager will study the financial statements and other available information of their new customer. And then, based on the credit evaluation and also the management's based on the credit evaluation and the management credit policies, the credit manager will give an appropriate credit limit to the customer. And next one, the existing customer. Okay, for existing customer, the manager in the credit department will compare the authorized credit limit balance with the customer's current order. So, the credit sales amount only will be approved by the manager up to the authorized credit limit only. It means that if the credit sales amount is higher than the authorized credit limit for that customer, the manager will only approve up to the authorized credit limit only. Next, we talk about the audit objective. Okay, for this process, there are 3 audit objectives, which are the accuracy, valuation, and allocation. For accuracy, uncollectible amount due from the customer can be avoided. The valuation, it makes sure that the sales can be recorded at a realizable value. And for allocation, they make sure that the allowance for doubtful debt can be estimated reliably. Okay, next process is issuing goods. Okay, for this process, it takes place after the sales order and the credit is approved by the sales department. Okay, when the sales department when the sales department approve the sales order and credit, they will send the approved sales order to the warehouse. At the warehouse, there is a storekeeper, which the storekeeper is responsible to maintain the stock of goods. Okay, so the storekeeper, when they receive the approved sales order, they will prepare the stocks for shipments. They will process the order and they will prepare the stocks for shipment for delivery. Okay, and at the same time they will prepare a shipping document, which is the bill of lading. Okay, the bill of lading is pre-numbered and they will prepare it during the time where the good is loaded for shipment for delivery. Okay, so the shipping document will be enclosed together, will be attached together with the shipment of the goods to the customer. Next, we talk about the audit objective. Okay, of the objective, there are 3 of the objective, which is cut off, completeness, occurrence. As we talked earlier about the bill of lading, okay, the pre-numbered bill of lading is prepared at the time of loading goods for shipment, which it helps to establish the cut off at year end. And then the completeness, the bill of lading helps to ensure the completeness of recorded sales transaction. And as the goods are shipped to the customer during the period, the bill of lading can act as a proof of the occurrence of the sales transaction.
Invoicing customer. Accounting department issue a sales invoice and send it to the customer after the customer has received the good. So how do we know that the customer has received the good? We look at the customer's signed copy of bill of lading, where this document give an evidence that the customer has received the goods. Okay, this is an example of invoice. Okay, invoice is a document that a seller issued and sent it to the customer asking about the payment of the goods. Okay, the next part we will discuss about audit objective. Okay, we will discuss 3 audit objective related to invoicing customer. Okay, the first one is completeness. Okay, completeness. All shipment are properly invoiced and sent. Okay, the company should establish a control so that all shipments are properly invoiced and sent to the customer. The second one is occurrence. No fake sales transaction or duplicate invoice. Okay, the company
should establish a control so there is no fake sales or duplicate invoice are being recorded. Okay, the next one is accuracy. Accurate calculation of invoice amount at authorized price. Okay, the company should establish a control so that they can make sure accurate calculation invoice amount at authorized price. Okay, the last one is review related item to ensure that the sales invoice are prepared accurately. Okay, we review the systems, the reference, the date when the company shipped the goods, the date when the customer received the goods. We compare the sales order with the bill of lading, and we look at the prior of the issuance of the sales invoice. Okay, all of these related items we review so that we can make sure that the sales invoice are prepared accurately. Okay, the next one is specific control. Okay, the first one is segregation of duty. We segregate the function of issuing sales invoice with the sales recording. Okay, the next one is independently inspection. We independently inspection regarding the information of bill of lading and the information of approved sales order were prior to the issuance of the sales invoice. Okay, the next one is authorized price list. We use the authorized price list to determine the accurate value of sales. Okay, the last one is independent check. Okay, independent check on the quantity of sales in the bill of lading and we with the corresponding of the sales invoice, and independent checks on the accuracy of the price calculated in the sales invoice. Recording the sales. The step involved in recording the sales manual system. Okay, the first step is we record the sales invoice into the sales journal. Okay, the sales invoice is being recorded in numerical sequence to avoid any missing invoice. Okay, the next step is we posted the sales journal into the account receivable subsidiary ledger, and we also posted the sales journal into the general ledger. Okay, periodically we compare these two balance, which is the general ledger balance, the account receivable balance, to make sure that these two balance are consistent with each other. Okay, the next step is we prepare the monthly customer statement and send to each customer. This monthly customer statement is being served as a notification of the current balance to the customer. Okay, the next things is recording the sales process using the computerized system. Okay, the first step is the system will generate automatically the sales invoice and the bill of lading, and next the system will automatically update the sales invoice into the journal, which is the sales journals, and into the related file, which is the account receivable master file and general ledger file. Okay. Only authorized personnel can make any changes into the system. Okay. As we know, the IT system have two control, which is general control and application control. Okay. The general control procedure and the application control procedure can ensure or can make sure that the computerized system processes the sales transaction properly. Okay. General control is the overall information processing environment, and the application control is the um, the processing of the individual transaction. Audit objective. Okay, the first audit objective is completeness. Okay, establish a control in recording the sales to make sure that all the transactions are properly recorded. Okay, the second one is occurrences. occurrences there is two. Okay, the first one is establish a control so that there is no fake sales or overstatement recorded. Okay, the second one is immediately reconcile any differences spotted in the balance recorded by the company with the balance recorded by the customer. Okay, to make sure the occurrence of the sales transaction. Okay, the third one is accuracy. Okay, the sales amount should be recorded properly or accurately. Okay, lastly is cut off. The sales transaction should be recorded in a proper period. Collection of cash sales and receivables. In my opinion, collection of cash sales and receivables can be understood as recording all the cash received from sales transaction, whether it is from cash sales or whether it is from credit sales. Okay, this is the process of cash receipt. Okay, the first one is cash sales. Okay, the company sell the good by cash. So receive the cash, deposit cash in bank, and record the cash receipt. The second one is credit sales or receivables. The company sell the good by credit. The receivable are going to pay for the goods, receive cash, deposit cash in bank, record the cash receipt, update in account receivable record, where account receivable record will reduce the amount of account receivable. Audit objective and specific control. Specific control, segregation of duty. Segregate the function or the duty of the cash handler, the record keeper, and the monthly bank reconciliation. The next one is audit objective. There is two audit objectives, which is accuracy and completeness. Okay, the first one is accuracy. The company should record the amount of receipt properly. Okay, the next one is completeness. All receipts recorded properly. The company should establish a control to ensure that all the receipts are recorded properly. Adjustment to sales and receivables. What is an adjustment? A transaction which affects two or more accounting periods which require an adjustment. Adjustment to sales and receivable consists of discount, sales return and allowances, write-off of account receivables. Adjustment made towards sales and receivable should be supported by a document. Okay, this document should be approved by the authorized personnel. Okay, this authorized personnel should not have any authority toward cash handling and customer ledger maintenance. Okay, looking at the sales return. Okay, the sales return should only be allowed after checking that there is any goods returned by the customer. Okay. The sales return enclosed should be corresponding with the sales invoice. Okay, the next one is uncollectible receivables. Uncollectible receivables should be written off to make sure that the amount of the receivable is at the realizable value. The next one, what credit manager should do. Okay, credit manager should determine any uncollectible receivable amount to be written off, where this amount should be approved by the director of the company. Audit objective. There is two audit objectives related to the adjustment of sales and receivable. The first one is occurrence. Okay, the first occurrence is control over adjustment of sales and receivables related to discount, sales return and allowances, and write-off of account receivable which is important to make sure that the validity of the transaction. Okay, the second occurrence is a proper authorization of uncollectible receivable transaction should be made to make sure the transaction are genuine. Okay, the second audit objective is completeness. Okay, all adjustment arise are recorded properly, which means all discount, sales return and allowances, and bad debt arising during the periods are recorded properly as sales adjustment in the account.
2.4 Developing the audit plan. In this section, we will learn how to develop the audit plan for sale and receivable. The process of developing the audit plan involves risk assessment performing procedure. So, what is risk assessment? Risk assessment is a term to describe a whole process or method that have been used to identify the hazard and risk factor that have potential to cause problem to the entity. It analyzes and evaluates the risk and find the suitable or appropriate solution to eliminate the hazard or try to control the risk when the hazard cannot be eliminated. Risk assessment is important in sale and receivable because it can create awareness of the problem that might occur and help entity to prevent it before it happens. So in audit plan, we have 4 steps in developing the audit plan for sale and receivable. So for the first one is understand the entity to identify the inherent risk. The second one is obtain an understanding of internal control over sale and receivable. Third one, assess risk of material misstatement. And last one, auditor will design further audit procedure. First, understand the entity to identify inherent risk. What is inherent risk? Inherent risk, basically in company, there are some complex activity or transaction that need accountant knowledge, experience and also judgment to record the transaction. The transaction might be subject to error and risk that might be an omission or error in the company financial statement, even though the control of those activities is already taking place, which is the internal control. That is what inherent risk means. So this risk is the worst thing in the company because all the internal control in place has nonetheless failed. Understand the entity is the kind of knowledge that an auditor needs to be able to do. The environment of the entity, such as the nature of entity, need to be known and understood. Nature of entity refer to the operation, ownership, governance, type of investment, structure and finance of the entity. This understanding enables the auditor to understand the classes of transaction, account balance and disclosure to be made in the entity financial statement. In regard to the sale and receivable, the auditor need to understand the nature of the entity business in terms of 3 things, which is the first one is type of product or services, target market and customer, and pricing, sale, return, discount, credit sale, and payment policy. So we go to the first one of the nature of entity is type of product or services. This nature can help the entity to know the gross margin, which is the sale revenue that company retain after incurred direct costs used for the making of product or services provided. As an example, I choose Dash Ready Milk Industry Berhad. The produce made in can that the business collect 200,000 in sale revenue. The cost of goods sold consists of 20,000 that's spent in manufacturing supplies plus the 18,000 in pay in labor costs. So therefore, after minus the cost of goods sold, the company boosts 100,000 in gross margin. Next, the auditor should understand the target market and customer of the entity. As an example that I gave before, the ready-made industry main target market and customer is people of all ages, ranging from infant to the elder, in which they provide a range of dairy product segment in the meat processing industry. Thus, it can help the auditor to estimate the level of sales and receivable that can be known by understanding the customer classes and industry average collection period. So, what is average collection period? Average collection period means the average number of days necessary to convert business receivable into the cash. Next, the last one, pricing, sale, return and discount, credit, sale and payment policy. All of this can help auditor to identify any potential frictionless adjustment or transaction. Payment policy, especially of the main thing, need to be focused by the auditor, because payment policy can benefit entity to get paid on time. A payment policy help entity get paid on time. For example, Dash Lady Nik Berhad have a payment policy to Maiden Muhammad Holding Berhad, which let them pay the product that have been delivered within 13 days. So, with knowing this policy, can make an auditor to measure the possibility of the day payment will be made to the company. All of this understanding will help the auditor to assess the inherent risk related to the accession for receivable and sale. The potential inherent risk might be derived from the business risk, such as a decrease in sale due to economic decline, doubtful debt to the inability of the company to collect receivable, over or under state of sale due to improper sale recognition. If we could have a better understanding about the entity, this type of risk can be removed or reduced permanently. For instance, during the coronavirus pandemic, a decrease in sale will be detected in goods produced by the Dutch dairy milk industry, because we assume at that time people will reduce their spend or consumption on the Dutch lady product. So at that time, Dutch lady will reduce their production. Apart from that, the auditor should also consider any factor that may give impact to the accession about classes of transaction and account balance, such as sometimes the company get pressure to report high profit in financial statement. It is because company try to look good to the public with the highest profit and try to convince investor to invest in the company. They tend to engage in fraudulent reporting by creating features, sale or maybe incorrectly recognize sale with intention to do so. Pressure to report a higher level of working capital in which the entity may reduce the number or amount of doubtful account or increase the account receivable that are not real. The auditor of the entity should ensure the control to sale and receivable are implemented effectively when the fraud risk spot. So forming further audit procedure due to fraud risk will reflect the development of the audit plan. Design further audit procedure. Basically, it includes test of control and substantive procedure. Based on the assessed risk level, the auditor will determine the test need to be performed. To illustrate, the auditor should include a test of control if they do not obtain enough evidence to identify whether the internal control system in place are functioning effectively. While in the case of control risks are higher, a higher level of substantive procedure will be done by the auditor. So for the second one is obtain understanding on internal control over sale and receivable. What is internal control? It is always known as internal supervision, which help the entity achieve its objective in the short and long term. It also can be translated as the procedure and process by entity to safeguard its asset, accurately process information, and make sure to follow the law and regulation. The most important of internal control is preventive control, which may deter problems before they arise. Detective control, in which search the problem as soon as they arrive, and corrective control, which rectify the problem that had been detected. A good and effective internal control will reduce inherent risk related to the sale and receivable, because the cycle of asset and receivable are critical point of the entity. The cycle begin and end at the customer request, changes to the good or services to trade, and ultimately into the cash. The internal control that only apply to one of component, sale and accounts receivable, while the other component not, will lead to the persistence of a gap that at the end will be exploited by the maker of fraud. So there are some internal control that can be done by the auditor. The first one, the auditor may prepare a written description or flowchart of sale and receivable to see all the important part need to be concentrated. They also may complete internal control questionnaire for sale and receivable. They may identify if the internal control of a sale and account receivable implemented appropriately and effectively, such as observe the segregation of data between the cash handling and customer ledger, either of the sale transaction carried out in the according with the procedure set forth by the sale of a company, or observe the organized form used to record accounting transaction and collect the data. Last but not least, make inquiries for further detail from management. The auditor can review of the sale budget and sale documents to identify whether the sequence of pre-number document is recorded appropriately and without any fraud. A review of history settlement by each debtor, and information about aging or receivable for any debtor at any time. So for the third step is assessing risk of material misstatement. Risk of material misstatement basically is the combination of inherent and control risk, which inherent risk mean the material misstatement can happen before consideration of internal control, while the control risk is that the control procedure cannot avoid or detect material misstatement from occurring in the financial statement of the entity. After having an understanding of the entity, including internal control, the auditor needs to identify and assess the risk of material misstatement. This is to provide a basis for design and performing further audit procedure. Based on ISA 3.315.6, assess risk procedure should include inquiries of management and other relevant people, analytical procedure, observation and inquiry. The important thing is to ensure the risk identified is prioritized. Auditor may determine whether the sales are susceptible to risk of overstatement due to pressure of the entity to report the higher profit. Auditor also may assess if the control over sale cut-off are effective to make sure sales are recorded in the proper period. When the auditor already determined the risk of material misstatement, they need to design further audit procedure, which is the last step for developing of audit plan. Design further audit procedure will be explained detail in the next slide.
Next, I will continue to performing further audit procedure. So in this topic, it will discuss the procedure that should be done by auditor to determine the effectiveness of their client's sales and receivable system. The procedure that can be done by auditor is the test of control and also substantive procedure. The test of control should be carried out prior to the substantive procedure. However, for the sales and receivable system that are not well applied, the auditors can do the substantive procedure after they have clear understanding of their client's internal control. They can do some monetary checks to have clear understanding of their client's internal control. The test of control will include the test of design effectiveness and also the test of operating effectiveness. For the substantive procedure, it will include analytical procedure, test of detailed transaction, test of detailed balances, procedure to ascertain adequacy of the allowance for bad debt, and also disclosure. First is the test of control. Tests of control are intended to provide adequate evidence to assess if sales and receivable controls are working effectively. Auditors should examine and track improvement made to the program and master file that are used for sales, shipping, billing, and also recording orders. For example, if the client record their sales on timely basis, the auditor should examine unbilled document in the possession of the billing clerk to determine whether the shipment that already been made are not included in the unbilled document. The test of control required testing on the design effectiveness and also operating effectiveness. The test of control that already been performed and the evidence already obtained, when the auditors reach conclusion, the test of control should be included in the audit working paper. First test in the test of controls is the test of design effectiveness. In this test, the auditors use an understanding of the client's specific information system and internal control system to assess existence of critical controls over revenue and receivables. The auditor needs to understand the roles of revenue system in order to recognize the appropriate controls and possible errors. Once the auditor recognizes the existence and absence of appropriate controls, the auditor shall make a preliminary assessment of the control risk. The second test in the test of control is the test of operating effectiveness. In this test, the auditor will conduct a measure of operational efficiency that includes a range of procedures. The auditor can, for example, conduct an observation, performance, and also record inspection that include vouching, sales cut-off test, and also receipt cut-off test. In this test, it will determine the number of misstatements but not the size of misstatement, because the size of misstatement will be determined by the substantive procedure. For example, if auditor detect a misstatement in the credit transaction, the auditors can make a conclusion that the controls over receivable are not operating effectively. This test is conducted to obtain sufficient evidence about each assertion, such as the existence, occurrence, accuracy, cut-off, and also classification of the sales and receivable balances and transactions. Next is the controls over computer information system. There are two controls for the computer information system, which are general controls and also application controls. General controls apply to the whole aspect of the computer information system. Therefore, auditor will evaluate the general controls for the company as a whole. As for application controls, it will be applied to the processing sales and receivable transaction, and it will be evaluated by auditor using one of the three approaches, which is test of data approach, parallel simulation, and also embedded audit module approach. These are the risk assessment that can be done by auditor in this cycle. For customer order, the control procedure is approved customer is reviewed and updated. Sales order should be authorized. But for the potential misstatement, the sales made to an unauthorized customer. For credit approval, the control procedure is credit sales made to customer with poor credit rating, credit limit checked prior to approval. But the potential misstatement is credit sale made to customer with poor credit rating. For issuing goods, the control procedure is good issue check against approved sales order, division of duty for issuing and shipping goods. The potential misstatement is good issue or unauthorized order and difference between goods and quantity from sales order. Next is for the invoicing customer. The control procedure is to always check on quantity and price in invoice. Bill of lading was matched with the invoice. The potential misstatement is double invoice are created and price shown in the invoice was incorrect. For recording sales, the control procedure amount of invoice same with sales account bill of lading was matched with the invoice. The potential misstatement is recorded the sales twice or invoice are not recorded. For collection of cash and receivable, the control procedure is to always check the daily cash and predict preparation of bank reconciliation. The potential misstatement is credit sales and receipt were not recorded properly and cash may not deposited daily. And the last one, adjustment for sales and receivable. The control procedure is adjustment was supported by appropriate and relevant document, but the potential misstatement is unauthorized adjustment are made to sales and receivable. Next is the designing substantive procedure. This procedure is performed to detect material misstatement at the assertion level, such as accuracy, valuation, rights and control, and also include tests of details of class transaction, account balances, and also disclosure and analytical procedure and substantive analytical procedure. The auditor will plan and perform substantive procedure to be responsive related to the assessment of the risk of material misstatement. The auditor will include the procedure related to the financial statement closing process, which is agreeing the financial statement to the underlying accounting records and examining material journal entries and other adjustments that made during the course of preparing the financial statement. When auditor already determined the assessed risk of the material misstatement is the significant risk, the auditor should perform substantive procedure specifically responsive to that risk. These are the procedures that we include in the substantive procedure, which is analytical procedure, test of details of transaction, and also test of details balances. Next, I will pass to my friend to present the details about substantive procedure.
Okay, now I will present my part, which is analytical procedure. Analytical procedure are used in the financial audit to assist in the understanding of business operations and the identification of potential risk areas that need to be addressed. In the other words, they are actions taken by auditors to understand the company's finance, operating environment, and also history. These procedures are used to confirm expectation and perform in three stages, which are to review the understanding of an entity, as to whether any changes to sale and receivable, to determine any fluctuation in the amount of sale and also receivable balance between current year and also the previous year. And the last one is to determine ratios and trends for gross profit. There are two tests in the analytical procedure. The first one is test of detail of transaction, and the second one is test of detail of balance. Okay, I will show you about the transaction first. Okay, test auditors are used by the auditors to collect evidence that the balance, disclosure, and underlying transaction associated with a client's financial statements are correct. So this is the example of document inspection that we must use in the test of details. Okay, the first one is vouching, the second one is sales cut off test, and the last one is cash receipt cut off test. Okay, next about the confirmation of balance. Confirmation of balance is a written confirmation shall be sent to the individual customer to confirm the amount outstanding and payable by the customer. This confirmation will help auditors to find out full matters such as unexplained discrepancies reported by consumers on their account receivable confirmation, a large number of credit entries, and other changes made to the account receivable record or inconsistency between customer's name and amount on deposit slips, and subledger the account and amount credited. Okay, this is the form of confirmation. If the confirmation is positive, the debtors confirm whether the balance shown is correct or incorrect. And also, the auditor should inquire about the possibility of bill and hold transaction, extended payment terms or non-standard installment receivable, and also unusual volume of sale to distributors or retailer. Okay, if get the negative confirmation, the debtors respond only when the amount stated in the confirmation is incorrect and use the following condition exists, which is large number or relatively small customer balance. Auditor believes that customers are likely to give proper attention to and also assess level of risk of material misstatement for receivable and related revenue transaction is low. Okay. Okay, this alternative procedure are used when the confirmation is not effective. These are the two procedures, which is the first one is examine subsequent collection, and also the second one is watch unpaid invoice and supporting documents and constituting debtor balance. For the examining subsequent collection, the receipt of payment from consumers is the best proof of the presence and collection of the balance of the debtor. Remittance advice that follows a cash receipt should be balanced by unpaid invoice and the remaining balance. And the second one is unpaid invoice should be tracked to the bill of lading signed by the customer and also to the order of the customer to check the balance of the debtor. These are the methods to determine the allowance of bad debt. Okay, the first one is general allowance. The percentage will be used for calculating the amount. The percentage balance overdue or percentage of sales are used to estimate the allowance. And the last one is auditor will check reasonableness of the percentage used and the internal control procedures in estimating the allowance and also ensure procedure have been properly followed. And the second one is for specific allowance. Obtain an independent review or information specific to the debtors to ensure reasonableness of bad debt estimate. Okay, the last one is the disclosure requirements. The disclosure are the disclosure of requirements is review the list of account receivable and determine their categories such as amount due from related parties or employees. If they are material, a separate disclosure should be made. The second one is review any credit balance in the receivable list. The credit balance should be reclassified into liability. The third one is request management representation letter for any activities related to the account receivable. Okay, the last one is review minutes of meeting or any supporting documents such as contract or agreements for any information on pledging, assigning or factoring of account receivable. That's all from me. Thank you.
So for the last part, 2.6, conclusion. So the conclusion is this chapter is discussing the procedure involved in auditing a revenue cycle, which is the main account is sale and receivable. We already discussed 5 parts for the audit of revenue cycle, which is audit objective, nature of revenue and receivable, the accounting system and control activity, developing the audit plan for revenue cycle, and then we perform further audit procedure. An auditor needs to understand the function related to the sale and credit sale in order to determine the necessary internal control. Auditor should determine the accession and related audit objective for sale and receivable account. Audit objective for sale and receivable transaction is occurrence, completeness, accuracy, cut-off, and classification. While for the audit objective for sale and receivable balances is existence, right and obligation, completeness and valuation, and allocation. To achieve audit objective, auditor perform tests of control to determine control risk and adopt amount of substantive tests. Substantive tests concern the balances, amount of receivable and allowances for bad debt account. In this chapter, to obtain sufficient audit evidence, the test of detailed transaction and balances we will perform in stage. 2 types of confirmation can be used, which is the positive and negative form. And from this chapter, last but not least, alternative procedure such as review of subsequent receipt can be performed in the case that the debtor do not respond to the request and for the bad debt. Auditor need to verify the reasonable of the amount estimate. So that's all from us, Team Geneva. We hope you guys get a better understanding on audit of revenue cycle. Thank you.